assessment of entity's ability to continue as a going concern. Now, how many of you come across the knowledge of Enron? Enron. There's a company called Enron, based in US, 7th largest power generating company, generation and distribution company. They produced a financial statement on 31st December on a given year, and they had very beautiful rosy situation. Just after 2 months, shareholders go to courts, and they said there's something going wrong, and the 3rd month the court ordered to close the business. You can assume 7th largest power generation company in the world. You know what happened to the auditors, the poor fellows? Arthur Andersen. Arthur Andersen was the first largest audit firm in the world. The court ordered, no more Arthur Andersen, closed internationally. They wiped all the register of Arthur Andersen. That's what happened to Middle East. All the audit files of Arthur Andersen taken over by Ernst & Young. Ernst & Young became a very huge auditing firm in auditing. So, going concern, what we talk about going concern, we have to assess our capability of continuing our business in the future. If we feel, oh, we are struggling, we cannot continue, then our responsibility as accountants to say that in the financial statement. My friends, see, this is a fixed asset. From a definition point of view of a fixed asset, this will be there for the next 10 years. But this fixed asset is inside my company, and I'm going to close the company in 2 months. Is there any point of saying this is a fixed asset for me? No, I can't keep this asset with me. I have to get rid of this within the 2 months. The 2 months is less than 12 months, so this fixed asset I need to reclassify as current asset. Why? Not because it is not a fixed asset, because we are not having the going concern assumption. Clear? And if I have bank loan, normally I need to pay bank loan next 4 years. The bank here, so come to know, these buggers are going to close the business. They will be sleeping. They will be on the outside of your door, knocking your door, asking for money. So the non-current liability will automatically become a current liability. So that's the going concern. Prepare financial statement on a going concern basis unless management either intends to liquidate the entity or, very clear, right? So you can read from the net financial scandals. Different company names will come. Even previous days also we discussed. Just now I told you Enron, and then you have also WorldCom, Railtech, Parmalat, Satyam Industries. You will understand what is the implication of the going concern in the financial statements. Accrual basis. That's why we show receivables. We also have credit sales. We recognize income and expense based on the, not based on the cash flow, but based on whether we incurred or it is realized or materialized. That's how you prepare your financial statement. We discussed that previously. You are not supposed to aggregate unless it is similar item. When you are in a we discussed
today.
Yeah, we discussed today. No. We just discussed it. Anyway, so what we are saying is that if it is not similar item, you should not be aggregating and solving. Maybe transactions are very trivial. Now, good example, you have one line item in your administrative expense, steal of stock 2,000. There are double entry is what? You credit the cost of sales. You cannot show in the cost of sales. If that stock is stolen by somebody, it is not a cost of sales. should be taken out from the cost of sales and you should be putting under administrative expense. And if you want to club this along with miscellaneous expense, that is wrong. You got to show a separate line item, steal of stocks. The reader, the shareholder should know this. So you are not supposed to aggregate things unless it is similar. Then an entity shall present separately items of a dissimilar nature or function unless they are immaterial. Materiality comes into play the next point. For example, let's say you have stationery, 6 riyal only for the entire year, excuse me. And no point of showing that 6 riyal only. You could club it with administrative and stationery expense together. Then an entity need not provide a specific disclosure required by an IFRS if the information is not material. Now we were saying you should disclose financial information. It is not necessary that every single event taking place every hour you don't need to disclose, isn't it? Offsetting. An entity shall not offset assets or liability or income or expense unless required or permitted by an IFRS. Now, we discuss IAS 1. It has general rules that it is described there. And later, we will also discuss IAS 16. We will then only discuss things related to property, plant and equipment. And that they may talk about offsetting something. So, then which is more valid situation, you go to prevail based on IAS 16, not IAS 1. So that's what it says here. How often you should be producing your financial statement? Minimum every 12 months. It is statutorily required or mandatory requirement. And this is to external reporting. But within the company, every day, every hour, every week, every month, every quarter, every 6 months, it's up to you. But at minimum, you have to produce every 12 months.
But for the stockcation, these listed companies is different.
Yeah, that's a different story. You need to have an interim reporting. That again, it could be the 3 months or 6 months or 9 months. Comparative information. Why it is important? Now, when I'm sure all of you have at least read a financial statement. I will I will bring a typical financial statement in the next class. I will present this thing. You will see financial information are written for 2 years. What you think? Why is that? Why we should produce last year financial information when I am preparing financial for 23?
Speak. Please ask me a question.
You can see what happened before, what you are doing now, difference. Yeah.
We need to understand our current situation compared to our previous situation. It's a comparative knowledge. How good we have done, how bad we have done. And please remember, when comparing, it should be on the same basis. Last year you have 12 months, this year you have 6 months, it is not comparative. Last year 12 months, this year 18 months, it is not comparative. Sometimes it so happens, first year financial, people prepare for 18 months. Next year, we prepare for 12 months. But then to compare, then you need to interpolate that 18 months to 12 months. Then only you need to compare. Otherwise, if you compare, that's not correct.